Now let's look at economy current affairs from the month of August. Now RBI eases norms for external commercial borrowings. The RBI has relaxed the norms for companies raising external commercial borrowings. This has been done to stem the sliding of rupee with respect to US dollars. Now, external commercial borrowings are commercial loans that eligible resident entities raise from outside India. Now, external commercial borrowing include buyers or suppliers credit, foreign currency convertible bonds, foreign currency exchangeable bonds, and loans among others. Moving on, ECB can be raised via the automatic route, where cases are examined by authorized category dealers, or the approval route, where borrowers are mandated to forward their request to RBI through their authorized dealers. Now, RBI has increased the quantum of funds that can be raised by Indian firms through external commercial borrowings. The limit has been increased from $750 million to $1.5 billion till December 2022 under the automatic route. The objective of this relaxation was to increase the supply of foreign exchange reserves and thereby prevent the fast depreciating of rupees witnessed over the last few months. Now, benefits of raising the credit through ECB would be that companies can borrow credit at lower interest rate from abroad. ECB offers flexibility to borrow a large volume of funds for a relatively long period of time. Borrowing in foreign currencies enables companies to pay for their machinery imports, etc., thereby nullifying the impact of varying exchange rates. Now, ECB help in diversifying the investors' base and access funds at lower cost. This improves profitability. Some of the risks associated with ECB is that ECBs are susceptible to exchange rate risk. If the currency depreciates during the term of a loan, it raises cost of debt servicing. Moving on, we have limited benefits of loan waiver scheme. A scheme conducted by State Bank of India has found that loan waiver schemes provide limited relief to farmers. Now, some of the key findings of the study are that implementation of farm loan waiver schemes by state, only about 50% of the intended beneficiaries of the farm loan waiver announced by 9 states since 2014 have actually received the debt write-off. The poorest implementation of farm loan waiver scheme was in Telangana, where only 5% of the eligible farmers received the announced benefits. Madhya Pradesh 12%, Jharkhand 13%, Punjab 24%, Karnataka 38%, and Uttar Pradesh 52% also did poorly. Now, farm loan waivers implemented by Chhattisgarh in 2018 and Maharashtra in 2020 were received 100% and 91% of the eligible farmers respectively. So, Chhattisgarh 100% and Maharashtra is 91%. Now, reasons for the poor implementation of farm loan waivers is that the report identified rejection of farmers' claim by state government, low fiscal space to meet promises, and change in government in the subsequent year as the possible reason for poor implementation of these loan waivers. Now, concerns with the loan waiver scheme is that, according to the report, loan waivers destroy credit culture, which may harm farmers' interest in the long run. Now, the waiver also squeezed the fiscal space of the government to increase productive investment in agriculture infrastructure. Moving on to the panel on minimum support price, the Government of India has constituted a committee to look into the issue of minimum support price, natural farming, and crop diversification. The term of reference to the committee is on MSP to suggest measures to make MSP available to farmers by making the system more effective and transparent, give more autonomy to Commission for Agricultural Cost and Prices, that is CAP. The term of reference does not mention legal guarantee on MSP. Now, on natural farming, to make suggestions for programs and schemes for value chain development, protocol validation, and research for future needs and support for area expansion under Indian natural farming system. On crop diversification, to provide suggestions related to crop diversification include mapping of existing crop patterns of ecological zones of producers and consumer states, strategy for diversification policy to change the cropping pattern according to changing needs of the country, a system to ensure remunerative prices for the sales of new crops. Moving on to the windfall tax on oil products, the government has reduced the windfall tax on domestically produced crude, diesel, and aviation turbine fuel. It has also withdrawn levy on petrol. Now, a windfall tax is a higher tax rate on a certain big profits levied on a particular company or industry. On July 1st, the Union government had imposed export duties on petrol, ATF, and diesel, and imposed a windfall tax on domestic crude production, that is rupees 23,250 rupees per ton, or $40 per barrel. Now, the global crude prices has risen. Domestic crude producers were making windfall gains. Private oil marketing companies were exporting petrol and diesel to foreign companies for better profits. This led to a shortage of fuel at retail outlets, as oil marketing companies were not willing to sell the commodity at a loss, since domestic prices had not risen despite the rising crude and depreciating rupee. Now, the withdrawal of windfall tax. The price of crude oil in the international market has fallen on fears of recession in USA and globally. This has prompted the government to reduce the duties. Now, moving on to trade related concerns against India, the WTO has released its annual report. India received highest number of trade related concerns against it. Now, the key takeaways from the report are 35% of the new trade related concerns in 2021 were raised against various import related restrictions imposed by India. These issues were raised by countries such as China, Japan, European Union, Indonesia, and USA. Now, India and USA were the leading initiators of anti-dumping probes, accounting for more than 30% of the new investigations. Country can impose anti-dumping measures or duties on import of a product where the exporting company sends the product at a price lower than its normal value and lower than the price it charges in its home market. The dumped import cause or threaten to cause injury to the domestic industry in the importing country. So injury and the low price should be lower. Moving on, we have Financial Inclusion Index. The Reserve Bank of India has released the Financial Inclusion Index for financial year 2021-22. Now, the aim of the index is to capture the extent of financial inclusion across the country. The index comprises of three broad parameters, that is access, usage, and quality. The weightage of these three parameters are 35%, 45% for usage, and 20% for quality. Now, each of these parameters consists of various dimensions, which are computed based on 97 indicators. Example quality parameters include aspects such as financial literacy, consumer protection, inequality, deficiencies in services. Now, the index scores varies from 0 to 100, where 0 represents complete financial exclusion and 100 indicates full financial inclusion. The index has been constructed without any base year. It reflects the cumulative efforts of all stakeholders. Now, key findings of the report is the extent of financial inclusion across the country has increased to 56.4 in March 2022, showing growth across parameters. The index stood at 53.9 in March 2021 and 43.4 in March 2017. This shows rapid improvement in the reach of financial services over the past 5 years. Moving on to the national policy on blue economy, the Ministry of Earth Science is finalizing the national policy on blue economy. Now, the blue economy refers to multitude of ocean resources available in the country that can be harnessed to aid the production of goods and services because of its linkages with economic growth, environmental sustainability, and national security. Now, according to the World Bank, the blue economy is sustainable use of ocean resources for economic growth, improved livelihood, and jobs, while preserving the health of the ocean ecosystem. Now, India's blue economy, vast coastline. India has a long coastline of approximately 7,500 kilometers. 9 Indian states are coastal, and there are approximately 1,380 islands. There are 199 ports, including 12 major ports that handle 1,400 million tons of cargo each year. Now, huge living and non-living resources. India's exclusive economic zone of over 2 million square kilometers has huge living and non-living resources with significant recoverability, such as for crude oil and natural gas. The coastal communities, the coastal economy sustains over 4 million fisher folks and coastal communities. The purpose of the draft blue economic policy is to focus on optimal utilization of all sectors of maritime domain, living, non-living resources, tourism, ocean energy, etc. for sustainable development of coastal areas. Now, the thematic areas focuses on 7 areas, that is National Accounting Framework for Blue Economy and Ocean Governance, Coastal Marine and Spatial Planning and Tourism, Marine Fisheries, Aquaculture and Fish Processing, Manufacturing, Emerging Industries, Trade, Technology, Services and Skill Development, Logistics, Infrastructure, Shipping, including transshipment. It also focuses on coastal and deep sea mining, offshore energy, and there is also a focus on security and strategic dimensions and international engagement. Now, the National Blue Economy Advisory Council, it will comprise of the secretaries of relevant ministries as members. It will also include chief secretaries, principal secretaries of the coastal states, and other representatives from the industry. Moving on to the bond yield curves, hard and soft landing, and currency war. Now, the Federal Reserve of USA has increased the interest rate. Observers have pointed out that the inversion of bond yield curve in USA will prevent the Fed from achieving a soft landing for the economy. Now, a bond yield is the return an investor realizes on a bond. Price and yield are inversely related. As the price of a bond goes up, its yield goes down. Now, the yield curve is the graphical representation of a yield from bond with an equal credit rating over different time horizons. Under normal circumstances, the yield curve is upward sloping. It means as one buys bond of longer tenure, one gets higher yield. Moreover, a longer tenure also implies that there is a greater risk of failure. Now, inverted yield curve means that there are times when the bond yield becomes inverted. Example, bond with a tenure of 2 years end up paying out higher yield than bonds with 10-year tenure. Such an inversion of the yield curve essentially suggests that the investors expect future growth to be weak. Now, occurrence of the inversion of yield curve, when investors feel buoyant about economy, they pull the money out of long-term bonds and put it in short-term riskier assets such as stock market. Due to this, the price of long-term bonds fall and their yield, effective interest rate, rises. Bond prices and bond yields are inversely related again. However, when investors suspect the economy is heading for trouble, they pull out money from short term risky assets and put them in long term bonds. This causes the price of long term bonds to rise and their yields to fall. The significance of inversion yield curve is that inversion of bond yield curve has become a strong predictor of recession if such an inversion lasts for several months. Now, soft and hard landing. Now, currently, USA's Federal Reserve is not just reducing the money supply but also increasing the cost of money, that is interest rate. This is being done to contain soaring inflation. When a central bank is successful in slowing down the economy without bringing about a recession, it is called soft landing. That is, no one gets hurt. But when the action of the central bank brings about a recession, it is called hard landing. Now let's look at the currency war. The Federal Reserve is aggressively raising interest rates. Thus, more investors are rushing to invest money in the USA. This in turn has made the dollar stronger than all other currencies. On the face of it, this should make all other countries happier because a relative weakness of their local currency against the dollar makes their export more competitive. In the past, USA has often accused other countries of manipulating their currencies and keeping it weaker against the dollar, just to enjoy a trade surplus against USA. This was also called as a currency war. Example in case of China. Now, the case of reverse currency war. It is a situation in which countries are trying to make their currencies stronger. At present, every central bank is trying to figure out a way to counter US Fed and raise interest rate themselves in order to ensure their currency doesn't lose too much value against dollar. Stronger currency means the imports are relatively cheaper. However, raising the interest rate will decrease the chances of soft landing for these economies. Moving on to the global employment trend for youth 2020 report. The International Labour Organization has released the report providing update on key labor market indicators and trends. Now, the key findings of the report on India is that the youth employment participation rate declined by 0.9 percent points over the first 9 months of 2021 relative to its value in 2020. This situation is particularly severe for very young people aged 15 to 20 years. Now, online education, the school closures in India lasted about 18 months among 24 crore school going children, and out of among the 24 crore school going children, only 8% of the children in rural areas and 23% in urban areas had adequate access to online education. Now, female labor market, India has a very low youth female labor market participation, and Indian young women experienced large relative employment losses than the young men in 2021-22. There is high informal sector, that is domestic work is highly informal sector in India and wages are extremely low and young women and girls are vulnerable to abuse. Moving on to the current counterfeit currency in the banking system, the Union Minister for Finance has informed the Lok Sabha about counterfeit currency in the banking system. The value of counterfeit currencies, that is fake Indian currency note (FICN) in the banking system reduced from 43 crore rupees in 2016-17 to about 8.26 crore in 2021-22, amounting to a decline of more than 80%. The decline came after the Union government decided to cancel the legal tender status of 1000 rupees and 500 denomination currency notes in 2016. Now, the steps taken by the government are terror funding and fake currency cell in NIA has been constituted to conduct a focused investigation of terror funding and fake currency cases. The government has set up a FICN coordination group to share intelligence and information with the security agencies in state and center. A joint task force is functioning between India and Bangladesh for building trust and cooperation for exchange and analysis on smugglers of FICN. Moving on, the government conducts capacity building programs for various law enforcement agencies at union and state level. Training programs are held for police officers of Nepal and Bangladesh to sensitize them about smuggling, counterfeiting of Indian currencies. Now, a revival package for BSNL. The Union Cabinet has approved a revival package for BSNL amounting to 1.64 lakh crore. Now, let's look at some of the key aspects of BSNL's revival package. Upgrading BSNL services. Now, administrative allotment of subspectrum to improve the existing services and provide 4G services. BSNL will be allotted spectrum in the 900-1800 MHz band. With this, BSNL will be able to compete in market and provide high-speed data using their vast network, including in rural areas. Financial support for CAPEX. Government will fund capital expenditure through BSNL for the deployment of indigenous 4G stack. There will be a viability gap funding for rural wireless wireline operations. Despite the commercial non-viability, BSNL has been providing wireline services in rural and remote areas to meet the social objective. The government will provide funds to BSNL as viability gap funding for commercially unviable rural wire operations done during 2014-15 to 2019-20. Now, government is also trying to de-stress the BSNL's balance sheet. It will be done through debt restructuring and financial supports for AGR dues. Now, under debt structuring, government will provide a sovereign guarantee to BSNL and NTNL for raising long-term loans. This will help restructure existing debt and de-stressing the balance sheet. Now, financial support for AGR dues to further improve the balance sheet. Adjusted gross revenue dues of BSNL will be settled by conversion to equity. Now, augmenting the BSNL fiber network, merger of BBNL and BSNL to facilitate wider utilization of infrastructure laid under the BharatNet, Bharat Broadband Network Limited will be merged with BSNL. The infrastructure created under BharatNet will continue to be a national asset accessible on a non-discriminatory basis to all telecom service providers.